everyone, welcome to the Hillside Wealth Management YouTube channel. We're so happy you could be here with us today. We are going to be talking about one of the other companies that we own in our model portfolio, RH, better known by some of you as Restoration Hardware. So in the next 5 minutes, we are going to chat about what the company does, how long it's been around, what are some of the risks, what do we like about it, and something funny. So I'm going to pass it over to our two CFAs who are going to tell us a little bit about what does RH do.
Cool. So the modern RH is the luxury home furniture brand coming from the United States. And when I say modern RH, is that the current brand it really emerged from a turnaround by the current CEO almost 20 years ago from a nearly bankrupt niche-focused hardware retail store to currently one of the very few luxury brands coming from the United States.
Okay. So as in luxury brand, so what exactly is RH selling? They're selling furniture, they're selling home decor. Is that their primary source? Okay.
Yeah, that's a very interesting question because when analysts say all about the brand is selling furniture, right? But the current CEO has a much larger vision. I should say, and he would like to build an ecosystem around the brand. So they have been doing a lot of GCC product. For example, they launched RH Hospitality, including private jet. Also, they have launched a hotel business, I believe, in New York City.
Yep.
They call it guest house, which means I think super expensive hotel. And they have also tapped into the F&B. They have a restaurant, just like the IKEA, but at a much higher end in their store.
Interesting. So when did the original RH start, and then correcting that the pivot to the new RH was about 20 years ago?
Yeah. Well, yeah.
I think the original RH started in the late 70s, early 80s, something like that. So it was known as Restoration Hardware. But the current CEO has really sort of pivoted the business away from that focus, much more on luxury. He speaks to sort of kind of looking up to three corporations. The first would be Apple in terms of that ecosystem. So he wants to create an ecosystem in the luxury space, which again, as Stephen said, is fairly unique and hasn't been done. He looks to, is it Hermes or LVMH?
LVMH.
Right,
Yeah.
whose founder, Bernard Arnault, says that only in the luxury space can you earn luxury margins. So again, there's a focus on profitability. And then of course, Berkshire Hathaway really looks to Warren Buffett as sort of an example of how to allocate capital well, thinks that allocating capital well is important. So maybe one of the reasons that we like that.
And I think you alluded to it in that comment, but what do we like about RH? What is it the luxury brand and the potential that brings to margins?
Yeah, I think they have been building the moat through the brand power. That's one thing. And another thing is, as mentioned, they just start the current version of the luxury brand roughly, let's say 20 years ago. And right now they earn the top market share in the US premium home furniture industry, around 3% to 4%, still very modest, meaning they have a long growth runway to capture market share from other competitors.
Interesting. So do you see any risks with them spreading themselves on these, it's quite multifaceted, and if no risks there, what other risks do you potentially see?
Well, some of the obvious risks would be that this is not necessarily a business with a lot of high sort of recurring revenues. So, how many $10,000 couches do you buy in a given lifetime, let's say, let alone year? So that would be one risk. Another risk would be sort of stretching themselves too thin. I mean, when I read their filings, I almost get like a little bit nervous in my stomach, like, oh my gosh, they're doing furniture. They retrofitted a castle in the UK. They're opening boutiques all over the place. As Stephen mentioned, the yachts, the private jets. So yeah, that can be a risk. They seem very energetic, very focused, very driven. But certainly that could be a risk. And then there's some risk in terms of their financial.
Yeah, adding to that risk is a highly leveraged balance sheet. By highly leveraged, there's a sizable portion of the balance sheets in debt, right? And they have been quite aggressive in terms of buying back share, which we think generate tons of shareholder value because the share price went down a lot. But however, the financial leverage increased a lot. Their portion of the balance sheet increased a lot.
And so we can account for that risk. You know, just because there are some, let's say, red flags or black marks, if it checks a lot of the other boxes, such as this is a very classic example, the way that we can account for that risk is by position sizing. So RH is a relatively small position for us. I think it's a little bit under 1%. You know, if it ticked all of the boxes, you know, it might be 5, 8, maybe upwards of 10%. So that's how we're able to sort of account for that risk.
Good. And a funny story. I think you were in New York City and you texted the team pictures of this guest house.
Yeah. So I was in, near where they have that elevated walkway. And I just came across this property, and I didn't even know it was an RH property, but it was hopping, it was busy, there were people outside, there were people inside, and it just looked really neat. I think they had retrofitted an old meatpacking building. I think it was in Chelsea, part of New York. Anyways, and then I actually took photos because I was really quite impressed, and then later found out that it was the new RH guest house that Stephen mentioned in Manhattan. So yeah, kind of neat. They've got like a sort of basically a steakhouse to go with the meat packing theme, I guess, and then rooms upstairs. And of course, doing the due diligence that we do, we went on and read the Google reviews, and it seems to be quite highly rated.
Excellent.
Mm-hmm.
Thank you so much for your insight on that. And I like the alignment, by the way, with RH and Dreams with Hillside. So there you go. Hopefully we can make some of those come true. Okay.
Fantastic. Thanks so much for listening. And don't forget to like, share, and follow along.
Great.
Thank you.